Welcome to Mayer Brown's Global Financial Markets Podcast. Each 30-minute episode is designed to help listeners better understand the legal issues that impact their business given the ongoing uncertainties in the financial markets worldwide. Speakers from across Mayer Brown's practices and offices provide their timely insights on a wide range of topics, including finance, financial services, and insurance regulatory developments, securitizations, and litigation in the United States, the United Kingdom, Europe, and Asia. We hope you enjoy the program.
Hello, listeners. Our topic today is FinCEN requires reporting from dissolved companies. My name is Adam Kanter, and I am a partner in the Investment Management Group and a member of Mayer Brown's CTA task force based in our Washington, D.C. office. Joining me today is Matt Bisanz, a partner in our Bank Regulatory Group and another member of our CTA task force, also based in our Washington, D.C. office. With that said, let's begin. Since January 1, 2024, millions of U.S. and foreign reporting companies have been required to file BOI reports with FinCEN. On July 8, 2024, FinCEN issued interpretive guidance explaining that the beneficial ownership information, which we'll just call BOI during this conversation, for reporting requirement applies to certain legal entities that have been dissolved or otherwise ceased to exist after January 1, 2024. Matt, can you tell us what the impact of this guidance is for our clients?
Yes, thank you, Adam. It's an interesting impact for our clients because on one hand, it's really a lot to do about nothing, that these are dissolved entities. So it's not as if they might be exposing themselves to new liability by disclosing some nefarious enterprise. All of these things are long gone. But it is a paperwork hassle for many of our clients, as you know well and even better than I do. Large multinationals, large financial institutions, all types of commercial conglomerates are constantly forming and dissolving entities for all types of reasons. You have acquisition vehicles who might be formed to enter a new market. You have interim companies that are used for, say, any kind of triangular merger transaction. You have property holdcos and owner holdcos who are constantly being formed and dissolved as property changes hands. So our clients not only have a large number of active legal entities at any given time, but they are constantly forming and dissolving legal entities as the need ceases for them. And so this guidance or this new position that FinCEN is taking means that our clients will have to figure out how to file BOI reports for these entities that no longer exist.
Well, that sounds pretty serious. So what is the universe of dissolved legal entities that are subject to the reporting requirement?
This is fascinating to me because it is legal entities who were dissolved or otherwise ceased to exist after January 1, 2024. And that includes entities that were formed, say, years ago and were dissolved in January, February of this year. That includes entities who were formed in March of this year and then dissolved in May of this year. That includes entities who were, from a client's perspective, dissolved years ago. That it's surprisingly common for companies to go inactive and just be dissolved administratively through inaction. That you maybe your company winds down its operations, there's no more business going on, but no one gets around to filing or completing the paperwork with the state to dissolve it. And so after a couple of years of inactivity, the state says, oh, we're just going to strike this administratively from our list of corporations. But the company still exists in the sense that the original owners could come back and say, yes, the state, you have administratively dissolved or suspended it, but that was just my mistake. I'd like to reclaim it and continue it. And that suspended animation can last for several years. I think in Georgia, it's 5 years plus. And so if someone, say in 2021, had a corporation that went into suspended animation in Georgia. Technically, from FinCEN's perspective, that company is still existing and has not been dissolved until after January 1, 2024, and must be reported. So it's a surprisingly large universe of companies that are being dissolved this year, or again, in the case of administratively dissolved companies, persist into this year. And it won't end, I think, this year, but maybe we'll get into that a little later.
Okay, so purposefully or not, all of these reporting companies have been dissolved under state law. But how exactly does a dissolved entity file a report with FinCEN?
This is where I've gotten some great alliteration out of my thesaurus, that I just find that when we talk about companies or legal entities doing things in the first instance, it's great because they're non-corporeal beings, that they may have legal personhood, but they don't sit at the desk. They don't write emails. Even if you get one from a corporate email, there's still a person there who is key punching in the email. So this idea of reporting companies filing something in the first instance, I find funny. But it gets even funnier when it's a dissolved entity, because now it's just a phantasm or a remnant of a non-corporeal entity. And we're saying that they are supposed to file a report, that it's almost as if not only is the tax return being filed in the name of the corporation, but there is no more corporation for it. And I think as many of our listeners will know, typically our tax lawyers will say, well, no, you have to keep the entity in existence until it files its final tax return. That's part of the winding down process. And so here we've kind of skipped over that and gone right to the dissolution. So it's, to cut short, it's not. It is the dissolved entity who is filing, because the FinCEN obligation, the BOI filing obligation, rests on the legal entity. It does not rest on a successor legal entity. It does not rest on an owner. It does not rest on some other person. That it is on the entity. So that is the person who has to file.
Okay, but so we have this ghost of an entity that's been resurrected solely for purposes of making this filing. But who is actually submitting the filing for this dissolved legal entity?
That's an interesting question, because FinCEN has been good at saying who's liable for it, but they haven't really said who should be doing it. And so we've thought about this, that FinCEN has said that if you're a natural person, if you're like you or me, and you cause an entity to not file it, well, then you're liable. And also, if you're the senior officer of an entity, you're liable. And so we've said, well, looking at that kind of framework, I guess we could say that someone who previously, at the end of an entity's existence, they were a senior officer. On that last day, they were the one who signed the form that went into the Secretary of State saying, please dissolve the company. That person, that former senior officer, might be someone who should file. As another practical case, in many smaller businesses that are owner managed or member managed, that there's probably a beneficial owner, some individual who is the one who's operating the business. And so that last beneficial owner who's like, look, my restaurant has failed. I've declared bankruptcy or whatever. I'm leaving the business, and my company is worthless. I'm dissolving it with the state so I don't have to pay the fees. That beneficial owner, as the last beneficial owner, could be a candidate for filing. I think as a law firm, we have already said we don't have an obligation to file for existing reporting companies just because we formed them. So I would say it's probably not the lawyer or tax accountant's job to file for these companies, that their remit is limited to the things they were hired for. They are not an officer of the company. They're not an owner of the company. you might get into this weird space that I've seen with some active or not dissolved reporting companies where it actually looks like the registered agent is the owner because, like, say you have an LLC that has an operating agreement that lists the owners of it, but there is no document filed with the state until the operating agreement is signed. And so we've had some clients say, well, in that 3-4 week period between when the registered agent creates the LLC and when I execute the operating agreement, like, everyone knows I'm the owner of it. I'm the one who called the registered agent and told them to form it, but I'm not really the owner of it because there's no operating agreement in place. And I'm hopeful FinCEN wouldn't take this tact, but if you do the same analogy at the end of life of the entity, you might even wonder, well, is the registered agent who was the last person on the document as the, say, service of process recipient, are they the one who should file it? And I don't think that's the right answer. I think it's probably the senior officer or the former owner. But yeah, FinCEN has not been clear on this point.
Well, I'm glad to hear it's not us on the hook as the lawyers, but we've been talking so far about more traditional operating companies. But in the investment management context, a commingled fund typically has no officers and is operated really by its general partner or equivalent or the investment manager. Now, I suppose that the GP or the manager might be a candidate for filing the entity's report, but nothing in life is free. If we're talking about a subsidiary of a fund, then the fund would likely pick up the cost if the fund is still existing. But if the fund itself has dissolved, it seems like the manager is going to be left holding the bag, which isn't necessarily a great place to be. But let's turn back to some of the practical issues. When the report is being submitted for the dissolved entity, what goes on the form? Can you remind us?
Yes. This is some interesting stuff that only a nerd like me, or maybe you. I won't say you're a nerd. You're pretty cool. But the form has, as many people have seen, it's got the name of the entity, which is pretty easy to figure out. It's got the address of the entity, which hopefully would be the last address on record. Then you have to have a tax ID number, which creates a weird thing of, if the company is dissolved, there's no way to get a tax ID number for it. So if for whatever reason it did not have a tax ID number during its existence, say it only briefly existed again for an acquisition, or with some other kind of tax disregard, it's not going to have an EIN, which is just one of those practical things of, how am I supposed to file this form? Because it won't submit on FinCEN's website unless there is an EIN. Our practical advice has been, look, if you use a parent company's EIN, if you use an owner's social security number, that's probably good enough. You can't just put 9 zeros in, you can't just leave it blank, but like, you need to put something in for the form. So that's a field that's interesting. You need to list the beneficial owners of the entity, which are the persons who own 25% or more of the entity or exercise substantial control over it. And there's no real guidance on, for a dissolved entity, who owns 25% or more of it. That you might say, well, 2 months before it dissolved, there were 4 owners, but then it paid back the capital to 3 of them. So on the last day it dissolved, it only had 1 owner who had like $1 of capital. And it's not clear to me why reporting that 1 owner versus reporting the 4 at the point when the decision was made to end its life, why that's better or worse. But I think you could reasonably say whoever was the owner at the last day of existence is a plausible person to list for economic ownership. For beneficial ownership through substantial control, though, it kind of gets silly, because FinCEN wants to know who the senior officers and other persons, like you described, the investment manager types, the general partner employees who exercise substantial control over the entity are. And as an entity is being wound down, those people will, for the most part, fall away. That you'll terminate senior officers as you wind down your operations. You presumably will have less need for portfolio managers and investment committees. You'll have less need for other major decision makers, like you'll shut down your planning department. And so it really at the end of a company's existence, you might only have one person who exercises substantial control, the person who's signing the dissolution documents, even though a few months earlier there could have been a much larger number. And if the goal is to find all the people involved so that we can figure out what bad things were going on at the company, why allowing the company to report as of the last day of its existence when there might only be one? That just again seems like FinCEN didn't think through the process. I think the right answer is that you can just go with the people who could make the important decisions on the last day of its existence or at the moment the dissolution paperwork was signed. But again, this just feels like FinCEN missed the forest here.
All right. Well, maybe another practical question, which is what if the person submitting the report doesn't have the necessary information to complete the form? You outlined a few of those circumstances that can arise, but what do you do?
Yeah, there's no option to say, I don't know. That, as you may have heard on our earlier podcast with Brad and I, we talked about FinCEN specifically said there's no option to say can't obtain it. And I think that this is where it can get awkward, particularly for, as you described, where there are investment managers or intermediaries involved, because you might have an investment advisor who is operating a private investment company for a high net worth individual, and they think they dissolved it this year, and so they no longer need to report. And then the investment manager realizes, oh no, there's this new guidance from FinCEN, and they go back to the high net worth individual and say, hey, can you get a FinCEN ID so I can file this report? And the individual's like, no, I'm not doing that. I'm not giving you my information. Like the company's gone. That's why we dissolved it. So then you're left in this, well, what do I put in? That you have to attach a PDF of a driver's license. So you can't even just say, look, I can look the person up in the phone book and intuit it, or I can look back at their onboarding documentation. Like, you need actual information. And if you don't have that, I think you end up in a place where your choices are either I don't submit a report or I submit a partially completed report. That, again, going back to your world of investment management, so the high net worth person won't give me their passport. So I list myself as a person with substantial control, and that allows the report to be filed. And, if FinCEN ever comes and says, look, you submitted an incomplete report because there was this high net worth person who owned it, it's like, hey, I tried. They weren't going to give me the stuff, or they passed away, and that's why the company administratively dissolved. I wasn't going to get a valid passport for someone who's deceased. Like that kind of thing, FinCEN's just going to have to understand.
Now, I almost hesitate to ask this, Matt, but is this problem, is this going to get better or worse over time?
It's going to get a little better. So right now we have all these companies who are being dissolved this year, were dissolved in the last few years, say administratively dissolved, or could be resurrected under state reanimation laws. So that's a huge bulky amount that will filter through the system, because everyone is supposed to file by the end of this year. And so after the end of this year, those companies will either have filed or they will be delinquent, but that will just persist indefinitely. For newly dissolved companies, they will have existed for this year. So if a company dissolves in mid-2025, whenever it was formed before 2025, it should have filed in most cases. So those companies should be okay. The place where it gets tricky is for transient companies, and not the transient investment companies that you and I talk about, but more like the companies that exist for a short time for a specific purpose. And so, like, let's say that you are a foreign company and you're buying something in the US and you don't want to buy it on a direct cross-border basis for tax reasons. So you drop a Delaware LLC down, you use it to acquire 100% of your target co in the US, and then merge the LLC with the target co. And you complete all of that within 15 days. And by doing that, the Delaware LLC goes away. Now, under the CTA, starting next year, you'll have 30 days to make the filing. And the best practice, I know my friend at another law firm and I were debating this on LinkedIn, is that, well, look, if you're going to have this kind of disappearing acquisition vehicle or other transient company, then you should file with FinCEN before it ceases to exist in that 30-day window. But as a just practical matter in fast-moving deals, having seen this kind of thing with the Bureau of Economic Analysis filings that we do, there's going to be a lot of cases where people forget about that acquisition company and the filing is not made before it's dissolved. And so I think that will continue to be a problem, that 90 days, 180 days after a big deal is closed, some poor associate is putting together the binder and realizes that acquisition vehicle never had a FinCEN filing made, and now they have to go back and figure out, well, was it exempt or not? Who were the people who had control for that brief 15 days of its existence? What is the EIN that can be used? And like that's just more friction on the economy for no real good purpose.
And it's not as though people are worrying about other things during that period of time where that entity exists.
Right, exactly.
So Matt, I think based on our conversations since this guidance came out, it sounds like you were pretty surprised by this new interpretation. Do you think we have other surprises that FinCEN might have in store for us and our clients?
I think so. I really do. That the reason I was surprised at this one is that it's a pretty low value area where these are companies that are dissolved. So in the world of bad actors, like it's unlikely that all of these administratively dissolved companies were out there committing crimes. It's also, I was surprised at it because of all the practical difficulties. Like, things are hard enough with the 32 million active reporting companies who are filing this year. Do we really want to add this burden in? And I know FinCEN doesn't think the same way I do, that in the initial CTA proposal, when they were finalizing the rule, they thought that we should be submitting dead people's passports and going back to like 1900 and figuring out who formed General Electric and reporting that original incorporator for General Electric from 1900. And people talked them off that ledge. But yeah, they're not thinking the most practically about these things. But I think there will be other surprises as far as the scope of some of the exemptions, that they're unclear. And I know at least we've been trying to interpret them practically for things like the tax exempt entity exemption, that you can't have an IRS determination letter within 30 days of your formation. Some of the things around the subsidiary exemption, where you have these huge pyramids of investment management entities. Some of the stuff that we have seen with other registered statuses, where it's not entirely clear if someone is a pooled investment vehicle or not, or what level of control they have through a pooled investment vehicle. That I don't know which area it'll be, but FinCEN will surprise us yet again.
Well, more fun things to look forward to in that case. Well, thank you, Matt, and thank you to our audience for listening. Listeners, if you have any questions about today's podcast or anything else related to global financial markets, please email us at gfm@mayerbrown.com.
We hope you enjoyed this program. You can subscribe on all major podcasting platforms. To learn about other Mayer Brown audio programming, visit mayerbrown.com/podcasts. Thanks for listening.